Okay, guys, so big crash going on in the markets, and I'm doing some technical analysis here just because we've lost momentum on silver, gold, metal rallies. So I'm drawing out my zones where we could see a potential bottom or a big counter trend rally. So on silver, I've been looking, we've clearly lost momentum, big wick here, um, bullish engulfing candle over here. Let me just draw that out for you guys. Yeah, so bullish engulfing candle over here. And yeah, it seems like we've lost momentum. So we may consolidate for a while here. So I'm drawing out the big demand zones. So a level that instantly stuck out to me was the 50 EMA. So here we have this indicator. This is the 10 EMA, 20 EMA, 50 EMA, 200 EMA. The 50 EMA is clearly a strong level for the bull market, like it was for Bitcoin on silver. So we have a big bounce here, big bounce here, big bounce here. So as you can see over here, 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 3 points. So I expect us to bounce off the 50 EMA, considering that currently it's at about 52. So it might go up, start going up a little bit into this demand zone here, which aligns perfectly with the last all-time high, uh, which we had over here, about 49. That would be perfect. So that's what I'm looking at, and it aligns with the golden zone Fibonacci. So, we've kind of lost momentum here, and we need, because this rally was so parabolic here for silver, we're just gonna have probably a slow chop down, something like this, just to retest buyers in this area. Because if price goes straight up, that's inefficient price action, because you're not getting price to go back down to gain new buyers. So say silver goes from $70 to $80. Silver going back down from 80 to, let's say, 72 lets new buyers enter into the market, which lets it make a new higher high because they see the lower price. So I expect I'm gonna be buying hard if we reach it in the 50s here, but I don't expect it to go too much lower uh, because of the strength of silver. And yeah, that's essentially it for silver. For gold, let's get rid of these drawings here. Okay, gold is holding up much stronger. But as you can see, we do have gaps here. But gold is much stronger because it's not even bouncing off the 50 EMA that much. So if we go back here, last time it bounced off the 50 was in 2023. We could get that, but we're looking at relative strength here, so gold may make a bit of a higher low than silver would here. Uh, so we may see, I'm looking at this kind of zone. This kind of zone here. Uh, let's just draw that in. I'm looking at this 4300 zone. Why? Because it's the 20 EMA, and also we have the yearly open at this zone. So if we go to here, we draw a line. Yes, about here. First, 31st. That is our yearly open here. Very strong level. So I expect something like this, but gold is clearly holding up much stronger than all of the other metals. So again, it may chop for a bit until we hit that yearly open when we have a lot of buyers come in who missed that initial January rally from metals. They're gonna come back in. So I'm looking at that kind of level. If we put in the 100 EMA, let's just put that in quickly. So if we put in that 100 EMA, yep, that should align because the EMAs, let's say it's the 100 EMA on the daily here. 100-day EMA means it's the average of the price in the last 100 days, but it's an exponential moving average, which means the more recent prices are higher weighted. So, big gold's been going up this whole time, so probably it will go to around this level and we'll bounce off the 100-day. Let's go to the weekly again. I mean, yeah, that checks out pretty well. As well aligns with the October 2025 high. So I expect gold to hold up really well. I mean, the gold silver ratio is rallying quite a bit here. Let's just get rid of this. Gold silver ratio, I think, has found a bottom in the short term. Let's just go to the monthly here. It seems to have found a bottom here in the short term. So we may make a lower high here, maybe up to this 76, 80 level or so. Uh, yeah, so during the chop phase, we may see some relative strength from gold. Because also, like, the gold market cap is much bigger, not as easy to manipulate. So, yeah, there we go. Um, I really like platinum as well, actually, because if we go here, most recent high, it failed to break out from its most recent high. But if you're looking at it, right, gold broke from its high in 2023. Silver broke from its high last year, 2025. So I think it's just a matter of time before these other smaller market cap metals catch up. So yeah, platinum tested its high, failed to break out. It's going back down, but a very similar thing happened to silver here. If we go to the weekly, if we go to the weekly over here, we have a similar kind of thing where if we mark out our 2011 high over here, let me just mark it out actually as a line. So we have our 2011 high over here, which is about $50. So now we go to the weekly, or we could even go to the daily here. You see, look, fails to break out of the high initially, retraces, tries to break out again, establishes support, then goes up. So I think it's a matter of time before these other metals catch up. Platinum is very close to its all-time high, but it will probably retrace back to this demand zone here. Palladium is a bit further behind platinum, but I think it will have a similar scenario. It has to catch up to these highs that it had in 2021, I think it was. Yeah. So it still has palladium still has a long way to go, but it's a liquidity rotation. As gold gets really high value, silver gets really high value, investors are going to be looking into these metals, which are also limited in supply, but may have not reached the highs yet, so they see a higher risk to reward ratio. So that's what we're seeing in platinum and palladium. So I expect them to do really well, you know, this year and next year. Because all the attention's been on silver, I think platinum, palladium will do really well. Okay. Now, let's go to crypto, to Bitcoin. Let's remove our annotations for Bitcoin, start afresh here. Start off on the weekly, and let's put our EMA. No, I lost my moving averages, so we're gonna have to put. Wait, I think we have it favorited, our favorite little indicator. Surely it's there. Because I'm on the free version of TradingView, so I can only use two indicators. So I use this indicator which combines like multiple moving averages in once, so I can see it, but I don't think it's here. Mm, yeah, it's not here. Oh well, we'll work with it. We'll work with it. We'll just do two EMAs here. I mean, the most important EMAs in general are the 50 and the 200. So if we put the 50 like this and we use red, and then if we put in the just a little, trading view tutorial, since we made this mistake, put this one in purple. So there we go. Okay, weekly EMA, super, super clear over here. Big line in the sand for the bull market for BTC. Bounced off it so many times. So many times. Once here, twice here, three times here, four times here. Fifth time broke down, flips it into resistance, and now we're going down here. Um, so yeah, obviously our next level of support is at 68K over here. Um, I expect it to hold at least temporarily because we have a lot of liquidity, loads of liquidity in this region. We have a lot of liquidity uh, in this region. So all of these buyers who came in during when the ETF hype was coming, you're gonna have a lot of buyers re-entering at these prices because you have a lot of liquidity here. So this kind of level, this kind of level here. Bitcoin's looking like a really appealing buy right now. Uh, yeah, could go lower though. ETH, I'm not gonna be interested in altcoins until they get to their lows here. So down here, because the thing is with ETH and Solana, for example, their supply is always ETH and Solana's supply. There's always new supply entering the market, which is always putting down pressure because if you're staking like ETH, for example, let's say you're getting a 3% yield per year, that's new ETH entering the system. So in the long term, ETH price isn't going to go up like it would for Bitcoin or stocks. But it does tend to have these really powerful rallies, like from the April 2025 low, it did a almost a 150% here, in the span of like a few months. So if you can capitalize on these, then um, it's very lucrative. Um, or that's what Solana did. So I'll be looking to go into altcoins as a trade, but not until they're in these really low prices, like over here. That'll be a massive buy zone for Solana. Over here for Solana. For ETH, I don't know. We'd have to see how relative strength plays out. I expect ETH to be a bit stronger, but these levels would be a strong buy level for ETH. Even if ETH makes a new low after entering these prices, it's gonna at the very least create a counter trend rally. But I'm not looking into altcoins until like 6 to 12 months. They really have to get low to be appealing. Um, so yeah, let's have a look at S&P 500. S&P 500, so far it's holding up, but I think, metals have had a big pullback. Crypto has. I think stocks, it's kind of coming for stocks as well. But so far it is maintaining market structure. So it's made let's just draw the arrow here. So far has been holding up structure. Higher low, higher low, higher high up here, higher low over here. And it's currently using the 50-day EMA support. So I think it's a bit too early to say for stocks. Uh, whether they're gonna have a pullback or not. But I think with all this uncertainty with the new Fed chair, uh, I don't have see a reason why stocks would rally. Like if you look at the let's look at the US 10-year yield, right? So these are the US government bonds. When the new Fed chair, when Trump nominated the new Fed chair, it was on the 30th of January. The yields did spike up a bit, but they are retracing. So the effects are still uncertain, actually. We're just gonna have to sit back and see uh, what's gonna happen with that because this this new Fed chair, the markets aren't too sure. Okay, that was okay. Big bond. People are buying a lot of bonds right now. So if the bond yields are going up, uh, people are selling their bonds because now the U.S. government has to offer a higher yield to get them to buy the bonds. If the bond yield is going down, then that means that people are buying U.S. bonds, supply and demand. Because if bonds are high in demand, the U.S. can afford to offer a lower yield on their borrowing. So still kind of uncertain what the markets think of this new Fed chair nomination, because I was gonna say 30th January yield spikes up 1.5%, which is a lot, but today it's really, really, really dropping, and I think it is because of this sell-off. I think it's just uncertain time. You know, metals have rallied so much they're selling off. I think people are seeking safety in the US bonds, but I think our levels, you know, we don't really have any defined levels yet. I think it's a wait and see time in the market. I definitely don't see it as like at least for the next month or two, definitely not bullish. Like Powell's not gonna cut rates at all. So and then still have to wait what this new Fed chair is gonna say. Kevin Walsh, very interesting guy by the way. But yeah, that's my overall thoughts on the market. Like just a quick like, because I was doing some technical analysis and I was like, might as well yap a little bit while I'm doing it and make a video out of it. So yeah, that's basically it. Um, we'll come up with a more structured video, although I'm thinking what I should make the video about. So we could examine Kevin Walsh, or I could do more fundamental analysis like gold, silver, when to buy in your investments, about dollar cost averaging. But yeah, but I'm gonna be heavily looking at to dollar cost average into Bitcoin because I do think it's fallen so much and metals still have a long way to go here to even reach, like for gold, it hasn't even touched its January 1st level. Silver still has a lot to retrace. Like it's so volatile, who knows how low it could drop. So, you know, metals have just lost momentum, so we don't know how far that they're gonna pull back. Whereas Bitcoin's been pulling back for a while, and it's going to a lot of these crucial levels. I mean, look, it's already wicked to that 200 EMA, 200 week EMA here. You know, it's due for some kind of rally, even if it's a lower high. So yeah, that's my thoughts on the market. Have a good day, guys.